Dear viewers, this is part 2 on our series on capital gains tax that arises because of sale of immovable properties. In part 1, we discussed how to calculate the capital gains arising out of sale of immovable properties. Now in part 2, we are going to discuss what deductions can be made or what exemptions can be claimed when you are paying the capital gains tax. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but practicing financial planner.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the capital gains and all its implications, we have in our studios our eminent chartered accountant Sriram Rao to guide you. Mr. Sriram Rao, as you all know, is a practicing chartered accountant, partner at Nitin J. Shetty & Co. He is an NRI specialist. He is a specialist on direct taxes and a man who has helped several people across the globe in solving their tax queries. Welcome to the show, Mr. Sriram.
Thank you.
Mr. Sriram, this is part 2. You have done part 1, which is well appreciated by our audience. Now in this episode, I want you to talk about when people have to pay capital gains tax, what kinds of deductions are made available by the law while they pay the capital gains tax. Can you take through which are the sections under which they can claim tax deductions, and if there are any conditions which are available against that? How shall we start? Which section would you like to start with?
Let me try to be, a little simplistic.
You have to be, because you are a master in this, and there are people who is queuing up to take your services on solving these issues. So you have to make it as simple as possible so that people will understand it.
I'll try my best because it is more of a technical jargon there.
It is,
so, yeah. So see, earlier we have learned how to compute taxable capital gains, etc. Now, from this capital gains which is already computed, what are all deductions can be claimed? There are certain sections, specific sections, which are specifically designed to give exemptions or deductions from these capital gains if a particular individual makes a certain type of investments.
Okay. You have sold the property, there is a capital gains which has arisen against which you have a tax liability.
Correct.
Now let's look at what relief you get by different provisions of law and what you need to do and where are the exceptions.
Yes, exactly.
Let's start with one by one.
Yeah, that's what. Now let us see, these sections or deductions which I am going to explain now is eligible to be claimed only against a long-term capital gain.
Okay. If it is short-term
capital gain, no such deductions.
Okay. It is applicable only for long-term capital gains. Right. Okay.
So now in this there are about 3 sections which are applicable directly when sale of an immovable property happens. One is a general section, we can say, that is 54 EC, where any immovable property which you sell, property in the nature of land or building or both, whatever you sell, you can invest in specified bonds. There are about 4 bonds: NHAI, REC, then PFC and IRFC.
Okay.
So 4 types of bonds: National Highway Authority, Rural Electrification, etc. In that bond you can invest up to an amount of 50 lakhs in a financial year.
Maximum is 50 lakhs.
Yes.
Okay.
Maximum is 50 lakhs in a financial year, and claim a deduction against any capital gains. The investment that you make in these bonds will be locked up for a 5 years time.
Okay.
And when it is matured, it is tax free. This investment in bonds would also fetch a simple interest of 5% per annum. This interest would be taxable, of course.
Okay, it is treated as income of that year.
Yes. So interest will be taxable, and this interest will automatically get credited to your bank account, which is while applying to these bonds which you have designated. And apart from this, This in bonds can also be held in the form of demat apart from physical forms. and at the time of maturity, that is 5 years from the date of purchase of those bonds, the redemption amount would be directly credited to your bank account. It's a very simplistic kind of a way of claiming a deduction. And if the capital gain is 1 crore, you can invest only up to 50 lakhs.
Acha. So maximum limit that has been put here is 50 lakhs.
Yes.
And if I understood you correctly, the amount of capital gains that you have made, let's say that
Correct.
you have sold a property for 3 crores.
Yes.
And if your capital gains is 1 crore out of that,
Yes.
50 lakhs you have to invest in the bonds, which is
Yes.
the maximum permitted, and
Yes.
the remaining 50 lakhs is subjected to taxation, provided there is no other section which gives you relief on that.
Perfect. Say for example, if another example, if I have to say, if the sale consideration is 1 crore and your capital gain is only 30 lakhs, it would suffice if you invest only 30 lakhs in the bonds in order to claim this
To
benefit.
the extent of capital gains or 50 lakhs, whichever is higher.
Yes.
Right.
So that's it. So this is one general section.
Section 54
EC.
EC. Right.
Then one more section which I have to explain, which is a specific section.
Hmm.
Section 54.
Hmm.
This section applies only
Hmm.
when you sell a residential unit,
Hmm.
residential premises or residential flat or an apartment
Hmm.
or land, which is attached to that particular residential unit.
Yeah, 54 EC, it could be any capital gains, but
Yes.
section 54 specific, subject to residential premises or land adjoining that.
Yes.
Attached to that,
Yes.
rather.
So if you are selling that particular unit, residential unit, then only you are eligible to claim this benefit. Okay, sale should be of a residential unit. When you sell that, the consideration of that should be invested in a new residential unit or a new residential premises. Either by way of purchase. The purchase can happen 1 year before the date of transfer or within 2 years from the date of transfer.
Okay.
So,
So it means you are replacing one property with the other property.
Yes.
But it can happen 1 year prior or 2 years after that.
yes, this is for the purpose of purchase of a property.
Okay.
If the property which you are investing is purchased by you, then within 1 year before or 2 years after from the date of sale of this property, if you are purchasing, then this deduction can be availed.
Hmm.
If you are constructing a residential house,
Hmm.
then if the construction is completed within 3 years from the date of sale of the property,
Hmm.
whatever the amount invested either for purchase or construction of a house and one residential house, that can be claimed as a deduction from this capital gains.
So in case of construction, 1 extra year is given, taking into account construction time and other
Yes.
things.
Yes.
So if you replace your capital gains that you have got into another residential premises
Yes.
with a timeline which is mentioned 1 year prior
Yeah.
or within 2 years if you are buying a new property.
Yeah.
If you are constructing, 1 year extra time is given.
Yes.
So even in case of construction, it can be 1 year prior, right?
No. Construction, it has to be within 3 years from the date of sale.
So there is no, it will not be taking into account 1 year
No.
prior. If somebody has constructed a house 1 year prior, that's not
No,
constructing.
no, it will not.
So
be
construction should happen post sale of this
Yes.
existing property
Yes.
and should be completed within 3
Yeah.
years. You should have your
considered. By
occupancy
strictly
certificate
going
by
by
that.
the law.
Okay. Right. So,
So-
this is section 54
Yes.
applicable to residential premises.
Yes. Now, again here, as I said, the investment has to be done in only one residential house.
Hmm.
Now there is a special, privilege is given, which is one-time opportunity in the lifetime of that particular assessee, where instead of investing in one house, investment can be done in two houses. Such investment in two houses can also be claimed,
Okay.
provided the capital gain should be less than 2 crores.
Okay.
So this is the condition for that.
Hmm.
So if in your example, if I have to say, if the consideration is 3 crores and your capital gain is 2 crores after claiming the cost of acquisition, etc. So 2 crores is the capital gain that can be invested in 2 residential houses instead of 1.
Hmm.
And investment in 2 residential houses also can be claimed as a deduction from this 2 crore value of capital gains.
But you are saying this exercise
Yes.
you can do only once in your
in a
lifetime.
lifetime.
So it can't be a routine affair.
No,
You
it
can't keep
cannot.
on buying, selling and do these things.
No.
one-time exemption where your capital gains is very high, but it should be less than 2 crore.
2 crores.
Then you are allowed to invest in two
Two houses.
residential properties.
Otherwise, if you are, say for example, reinvesting in one after one purchase, then sell one house, okay, then again invest in one more house, only one house at a time, that is allowed any number of times.
Any number of times.
Yes, investing in 2 houses and claiming the deduction, it is not allowed more than once in the lifetime of the SSC.
Okay.
One point I would like to add. So the pointer here is the investment, even if it is done in more than one residential house, it can be claimed, but the claim will be only for the investment that you have made in one house. For example, say you have sold residential premises worth rupees 3 crores. You don't want that much bigger house, and your capital gain is say 1 crore. You have invested in 2 or 3 houses, 1 crore each. Whatever consideration has come, you can claim the deduction only up to one house. Okay, whichever you want at your option. Say you have invested in 3 houses, one is worth 2 crores, another 2 are worth 50 lakhs and 50 lakhs. So the claim of deduction can be only on that 2 crore house, which is more beneficial to you. However, entire 2 crore will not be allowed as a deduction because your capital gain is only 1 crore. So up to 1 crore you will claim the deduction, and there will not be any capital gain which is left over for taxation.
Okay.
So like that it is.
Right.
So now we have completed this section 54. Now let us come to the third section, which is even more specific.
Okay.
So if you are selling any immovable property or a movable property for that matter, other than a residential unit,
This is which section it is?
this is section 54F.
Yep. Okay.
Yeah. So 54 is only when you sell a residential unit.
Okay.
54F when you sell any immovable property other than a residential unit. Say for example you are selling a plain plot of land, or say for example you are selling a commercial property. Okay. So if you are selling those kind of asset which is not a residential unit or a residential apartment, then you can claim this deduction. The investment that you have to make is similar to what we have explained in 54. That is, you have to make investment in one residential house, and you can make either by way of purchase. Purchase can happen 1 year before or 2 years after, or by way of construction, which has to get completed within 3 years.
3 years. Okay.
From the date of sale.
Okay.
Okay, so then you can claim the deduction, but this deduction is again proportionate. The deduction is proportionate to the value of capital gains earned to that sale consideration.
So in section 54 you said deduction is the entire capital gains, but
Yes.
here you are telling it's proportionate of capital gains to the sale consideration.
Yes, I'll give an example here.
Okay.
Simple example, as you have started, sale consideration is 3 crores. Say I have sold a plot, which is a plain plot. Sale consideration is 3 crores. The cost of acquisition or index cost of acquisition is 2 crores. 1 crore is my capital gain.
Right.
Now, my capital gain as a proportion to my sale consideration, that is 1 divided by 3, is 33%.
Yes.
From this sale consideration, whatever I have received, I have purchased a house, residential house, worth rupees 2 crores. My capital gain is actually 1 crore.
Yeah.
Okay, 3 minus 2, index cost of acquisition 1 crore. But the deduction what I can claim here is, by making a 2 crore investment, is only 2 crore into 33.33%, which is 66 lakh odd. So your remainder 33.33 lakhs will be your capital gains, which is liable to be taxed.
Right. So if somebody puts the entire money into the new property,
If sale consideration is 3 crores, your capital gain is 1 crore. You have invested entire 3 crores into the new house. At that time, or more than 3 crores into new house. At that time, when you calculate the proportion, 3 crores into 33% is 1 crore. You will get the 100% deduction.
or to say in simple terms, if it is a property which is other than the residential premises and you have a sale consideration which has happened,
Correct.
when you buy something new, the capital gains relief you get is proportional to the investment that you are making in the new properties.
Correct.
It has nothing to do with the total capital gains,
No.
but how much of money you have put in the new premises.
Yes.
And if it is calculated as per your sale consideration, to the extent of the proportionate thing, you can get a tax relief on that.
Absolutely.
Not the entire thing.
Not the
Whereas in
entire.
case of residential premises, you are required to put only the amount which is equal to the capital gains you have made.
Yes.
Here you have an obligation to put the entire 100%, or you will get a proportionate adjustment for the capital gains
Absolutely.
relief.
Yes. Here, but there are certain additional conditions also.
Oh, this is not a law.
This is not it. So this is how you can claim the investment.
Why it is made so much complex, Mr. Sriram?
No, but the law is law what it is. So I need to explain. So to claim these deductions, again there are some certain additional conditions apart from what I have already explained. The conditions what I have explained apart from that proportion is similar to what I have explained for 54. But now this is an additional condition which is not there in 54. So this additional condition what it says is, at the time of sale of this property, okay, which is the original property what you sold, land or whatever, you should not have more than one residential unit.
Oh.
Meaning thereby, you can have one land, one residential unit, you can sell this land and make an investment in another residential unit. This is allowed. But if you have a one land and two residential unit, you are selling this land and making investment in another residential unit, which will make 3 residential houses for you. This is not allowed.
Okay.
Okay. At that time, if you have already, you can make investment, but you can't claim the deductions under this particular section.
Right.
Okay. This is one. Again, once you purchase this, okay, now you have only one residential unit, you purchase another residential unit, you can claim the deduction. But after purchasing this new asset, you cannot purchase another house, or you cannot even construct another house. The purchase of the new house, I mean, once you purchase a new house, you cannot purchase another house for another 1 year period of time. And you cannot construct a new house after purchase of this for another 3 years period of time. Okay. So that, third house should not come into picture at all within that specified period of time, overall period of time. Apart from this, there is also one more condition. Whatever the new asset which you have purchased, that again you cannot sell it for another 3 years.
So you can't buy, you can't sell, and there are several conditions which are attached to it.
Yes.
One thing I can tell Sriram very clear here, we have done our best to explain the capital gains tax rules and everything.
Yeah.
It's really complex.
It is. It is.
So my sincere request with the viewers is, it's good to know all these things. It is good to understand how does the law works, but probably I will not be wrong to say, whenever such sales happen and when capital gains has to be paid, please take the opinion of professionals, which is chartered accountants who are specialized in this, and sit with them, explain your case, provide them all documents, and let them do their job than you yourself computing this. I think that's probably the safest way. I personally feel this entire capital gains tax obligations can be computed.
Yes, of course, it needs to be done.
Right.
Yeah.
Now let's get into more trickier issues which gets involved in this. Now you told me exemptions and everything, but when these capital gains happen, complex situations can develop. For example, now you say that to gain a capital gains exemptions under that, there is a 6 months period available to buy the bonds.
Perfect.
Then you have got 1 year time to replace the property,
Yeah, 2 years time
or
for
under
purchase,
some different conditions 2 years property. How shall I file my tax return and claim the exemption if you are telling me that you have an exemptions available for up to 3 years to do this?
Correct.
But how will I file my tax return?
Yes.
How will the taxman know that what's my intention?
Yeah, that's what. So for this there are specific provisions where certain mandates are given. So if the capital gain earner wants to invest in bonds, they have 6 months period of time. Normally the return filing due date is 31st of July of the subsequent year after the completion of this financial year. So you will get normally sufficient time for making an investment into these bonds. So that is almost within the due date of filing the returns, you can make the investment, or within 6 months from the date of sale, whichever occurs earlier, you need to make the investment in bonds.
That is the easier one.
Easier one. If it is a investment, intended investment is in a residential premises. See, it is very difficult for you to complete the construction if you just started, or identify a house which needs to be purchased. So at that time there is a scheme with all the nationalized or scheduled banker, wherein there is a concept of capital gain account scheme. Under that you have to make an investment and show the government that I am intending to purchase. Okay, that's why I made an investment in that capital gain account scheme, and whenever you are purchasing after 2 years or within 2 years or 3 years period of time, or constructing within 3 years period of time, at that time you have to make the payment out of that particular capital gain account scheme itself.
So you block that amount in that
Yes.
particular scheme. So
Yes.
you tell your intentions very clearly. Once you prove that this amount is kept there for
Yes.
whatever purpose that you
Yes.
mentioned there, then it can be claimed,
Yes.
not otherwise.
You have to make that investment before the due date of filing the return of income.
Okay, it
This
should
is
be
mandatory.
there.
Yes.
It should be there.
Yes.
You can't come and say that 6 months later I got a loan and so
No.
I'll park that money. That's
No,
not possible.
Not possible. Yes.
That's a very good point to know about this.
Yeah.
One practical situation may arise. I sold a property.
Correct.
My intention is to replace it with a newer one in a place
Yeah.
where I want to go and live. But circumstances develop in such a way that I will not be able to consume this money within the stipulated 2 years, 3 years period, whatever it is.
Correct.
And I have parked this money in the designated bank
Capital
account.
gain. Yes.
What happens in that case?
At that time, it is simple to say that in the year in which that period expires,
Okay.
the entire amount which could not be utilized by you, that will attract tax, capital gain tax.
Okay. Am
It
I
will be
liable
the-
to pay any interest on that?
No, you will have to pay interest. I mean, maybe interest for that year itself.
Okay.
Okay, if there is a delay in payment of advance tax, etc.
Hmm.
Apart from that, there is not be any interest. That is, say for 3 years before you have made that investment and all. For that, there is no additional interest. Okay, because the capital gain, your intention was there, but due to circumstances, you could not.
Okay. And if I have parked that money in that capital government scheme account, do I get any interest for that?
Yes, it is a bank account, right?
Yeah.
So if it is a fixed deposit type, then the banker will provide the rate of interest at the time of opening the account itself.
Right. But I have kept money there, so I am not liable to pay additional interest on delayed capital gains
No,
tax
no.
because of non-completion of the
No.
utilization of that fund.
Yes.
But you are liable to pay taxes
tax.
at that point of
Yes,
time.
at the applicable rates. Yeah.
Okay. One another doubt that I have in my mind is, let's say that now you said that under section 54 EC you can invest in the bonds,
Correct.
and under other section 54 and section 54F I can
Invest
have an
in-
option to invest in another property.
Correct.
Is there a provision or is there a requirement that I can use either of the two or both or proportionate or anything like that, any combinations out of them?
You can do anything, sir, provided all the conditions as specified under those particular sections are satisfied.
Okay.
So, for example, you have sold a residential house. Okay, it is a multi. Say for example, you have sold a residential house, say for 3 crores, you have earned a capital gain of 1 crore. You invested 50 lakh in 54 EC bonds. Another 50 lakh you purchased one more residential house. That is 54 EC and 54 deductions, because you have sold a residential house. Both can be claimed here.
Yeah.
Okay, so no problem. For example, you are selling multiple assets. Say you are selling a residential house in that year, you are selling land in that year, and you have earned capital gains.
Okay.
So from the land sale you have earned a capital gain of say 35 lakhs. Your residential house you have earned say 50 lakhs. And you want to make investment in bond as well as another residential house. That is also possible.
Okay.
Okay, investment can be claimed, but provided all these conditions are satisfied. When you are claiming 54F, you cannot purchase one more residential house.
Yeah. Of course.
So all this has to be, technically
as long as
has to be.
the conditions are met, you are permitted
Yes.
to use multiple sections.
Yes, multiple property sale, one deduction, one property sale, multiple deductions,
Hmm.
multiple property sale, one deduction, everything is possible.
Okay. One other question a friend of mine asked is, okay, I get a capital gains exemption. Should I use the same amount of money to buy another asset, or can I bring some other money and buy it, and can I get an exemption?
That is a source of fund, you mean?
Yes, source of fund.
There is no stipulation as far as source of fund is, because once the money is received by you, it is as good as your money.
Yeah,
You can utilize any which way.
yeah.
So, but you have to make the investment. Say for example, if the purchase happens 1 year before,
There is no way you
in no way you could use that particular source. So the intention of the law is not to utilize the same source.
Okay.
You cannot identify this money, this has gone here. So that is not possible. So there is no such regulations also.
Mr. Sriram,
Yeah.
I'll again come back to the same old query. Properties are held jointly,
Correct.
and we discussed so many exemptions. Then, is it available for everyone, or only one, or what proportion each one can claim?
Now, if the properties are held jointly, I have already explained that the capital gain has to be calculated individually
Okay.
in their proportion. So when the capital gain is calculated individually in their proportion, the investment also can be done individually by them.
Okay.
For example, a property is sold for 6 crores, 50-50 is the share, and 1 crore each would be the capital gains. Each person can invest in 54 EC bonds, 50 lakhs and 50 lakhs, and claim the 54 EC deduction total up to 1 crore, but it will be separately claimed in their individual return of income. Same way they can, if they want to purchase a residential house, they can individually purchase separate houses.
Probably of all the things out of this capital gains tax episode that I have done, probably this is the simplest one. If you are holding jointly, decide what is the proportion each one
Yes.
of you own it.
Yes.
Beyond that point, all provisions apply at an individual
Level.
So there is nothing of a joint thing you
Nothing.
have to really worry about. This is
Nothing.
the easiest part of
Yes.
it, right?
Yes.
Dear viewers, till now we asked about questions pertaining to the long-term capital gains tax. Mr. Sriram, I just want to ask you now, what is the relief which is available for short-term capital gains tax?
Actually, apart from the cost of acquisition, etc., and related expenses, there is no specific exemption or deduction which can be claimed out of the short-term capital gain.
Okay.
Okay. However, if the short-term capital gain is the only income for you, because at that time, whatever regular deductions which you can claim, say for example, you have invested in life insurance premium, you have invested in mutual fund ELSS,
You mean to say 80C,
ATC
exemption,
deductions,
chapter 6A.
Chapter 6A deductions,
Okay.
or this medical insurance premiums, or donation to specified charity institutions, etc., which can be regularly claimed against any income. Those deductions can be claimed against this also.
Okay, your short-term capital gains is nothing but your income.
Yes.
Whatever exemptions you get for while filing the tax returns, those are as usual available
Yes.
for you. If you are eligible for it, you can make a claim on that.
Yes.
Other than that, there is no other
No other
relief,
relief
which is
provided.
available when it comes to question of short-term capital
Yes.
gains.
Again, here this chapter 6A deductions, this cannot be claimed against long-term capital gains because there is a specific deductions which are available for them. So that cannot be claimed against long-term capital gains. These are one way we can say that this is a specific deduction which can be availed against a short-term capital gain alone. Yeah.
Well, Mr. Sriram, thank you so much for simplifying to the extent possible the complexities of capital gains, the deductions, how to compute, what points that need to be kept in mind. A big thank you for you on behalf of all our audience for bringing these points to the notice of our viewers. Thank you very much, and I would look forward to see you in part 3, where I want you to talk to the actual amount of capital gains, how much it comes and what kind of a proportions. I will look forward to see you in part
Definitely.
3 of this series on capital gains. Thank you very much.
You're welcome. You're welcome.
Dear viewers, hope the episode part 2 on capital gains series helped you to understand what deductions are available or what exemptions are available for you when you have to pay the capital gains tax. If it helped you to understand the complexities of capital gains tax, please like this video. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with part 3 of this series very soon. Dear viewers, we here at NRI Money Clinic are trying to solve many of the problems faced by the NRI community. We are in a position to solve the problems faced by this community here in India. But our NRI community has lots of questions, lots of problems in the countries where they are living. If you are a professional who is working in US, Canada, UK, Ireland, Eurozone, Singapore, Australia, Japan, Hong Kong, China, or any other countries where you have an NRI community, you have a chance to appear on our channel. If you are one of the professionals, chartered public accountant, a tax specialist, financial planner, or advisors in any other financial field, then probably we have an interest in you and you get a chance to appear on our channel. If you are interested to appear on our channel to discuss the problems faced by the NRI community in your respective countries, please send us a WhatsApp message on the number shown here on the screen. We'll get in touch with you and we explore the possibilities of associating with you.
Press the bell icon for more details and subscribe our channel.